It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. Got the live Lauderdale by the Sea cam up there. A little stormy out this week, I think. Not stormy, but going to be windy. And still not too bad. I don't think we're going to see a lot of rain. Let's move out of the live cam here, and we got a lot of stuff to get through here pretty quick. I got some good stuff to share with you here. And let's go into, listen, I repeated this over and over and over for a long time, and I finally wrote it down. So if you expected to get rich quick in silver, you're in the wrong market. If you want to preserve your wealth over time, you're in the right place. Want to get rich quick? Go to a casino, rob a bank, or play the crypto game. That's just my opinion. I've said this over and over and over, and I've seen a lot of people really, not a lot of people, but some people say, "Oh, silver has not done anything. It's garbage. It's nothing." But the fact is that if you bought it with the expectation that you expected a ride directly, a rocket ship to the moon, then you were kind of sadly misinformed about the silver market. Now, silver market can go up substantially, and you can make a lot of money on it, but it's very cyclical, and it takes certain dynamics for this all to happen. And we're in the middle of a bull market right now. Don't forget, we were in the 70s. We were in the $2 to $5 range in silver, and then up in the 80s we got as high as $50, but that was the Hunt brothers cornering the all the physical out there, and we've got some similar parallels today with JPM cornering a bunch of physical silver. Who knows what they're doing with it? I'm sure it's not in our favor whatever they're going to try to do. However, they'll drive it up, and eventually lay off what silver they have into at a much higher price, and then they'll probably drop the hammer on it somehow by going back into that short position. But no less, this stuff we know already, so let's not go there right now. Let's move over to one thing I have not noticed. With these big silver prices down like this, there has not been any capitulation whatsoever. And let's go into what is capitulation. And most of you know this, but just kind of to burn it into your memories and into my memory. Capitulation is when investors give up any previous gains in a security or market by selling their positions during periods of decline. Capitulation can happen at any time, but typically happens during high volume trading and extended declines for securities. A market correction or a bear market often leads investors to capitulate or panic sell. The term is derived from a military term which refers to surrender. Okay, so what we haven't seen at all is any physical capitulation by retail traders. I've sold tons and tons of gold and silver throughout my lifetime, and really, we didn't see much capitulation after the market fell in 2012. Not an awful lot. Over the years, we did see some, but there's a lot of silver out there in retail hands, and the retail public has never fully capitulated in silver at all, even after the 2012 smackdown. And in this market right now, we're seeing it's all buyers. There's no sellers. We hardly get anybody, and we buy tons of silver and tons of, well, not tons of gold, but we buy tons of silver and lots of gold in my store. And I'm a retail frontline guy. I work directly with the public. We're a brick and mortar here in South Florida, a very wealthy area too. And I tell you, I've not seen any retail capitulation. But what's causing these down prices? I mean, you got to ask yourself. I mean, prices are down quite a bit. We'll get into that to a moment here. I want to show you the chart here. We'll get to that in just one second. I'll kind of give you some of my opinion on what's happening out here. Let me just refresh this because it's been a little since I've refreshed this screen right here, and do a quick refresh. These spots are courtesy of CCE, Certified Coin Exchange. It's a paid subscription service for dealers only. However, they do have some retail portals out there that are really cool, and they've been around a long, long, long time. One of the good guys out there as far as rare coins and precious metal. They used to call it a teletype system. I'm not even sure what you call it, a communication system, a buy and sell system between dealers. But no less, they do have some good, if you like rare coins, they do have a good retail rare coin portal out there that you can look at for free. Let's look at the markets here, and I like this site because it's a static page. It's not popping around in front of us all the time, and it doesn't take up a lot of memory when it's static. So range is 1723, low 17, low 17s. It looks like silver. I mean, gold got down to a little bit. pop back up to that 1745 range. And kind of what I've been saying is two things are happening here. The gold to silver ratio, and let me just do it real quick. I did it this morning, was 80 to 1, so which was even higher than it was before. I thought that would tighten up a little bit. Let me ask Siri here. Oh, hang on one second. Let's try that again. Okay. 1,743.57 divided by 21.89. And there we go, 79.65 to 1. The spread's tightened up a little bit here, apparently since this morning. But still, we're well above that average. I think the 30-year average, or what we've typically seen for the last few years, when it sits in its average of 30 years, has been around 65 to 1, if I'm correct, right in that range. Give or take a little bit, probably give a little bit. It's the ratio is still quite a bit off, and gold just seems to not want to really break that sub 1700 level. Although, if we see a financial collapse, which we will, you will see gold and silver to get smacked really, really hard, but it'll be paper prices only, and not unlike what we've seen this week with silver, especially when silver got the smackdown. That's paper move. There was no retail physical capitulation whatsoever. In fact, more retail buyers stepping in and buying the dips, believe it or not. And again, I'm on the front lines. I see this. We're selling, even in this market, lower market, upper market, 20 to 30 bucks. We've been, in fact, $12 to $30 silver. Our sales have been far outpacing our purchases, over-the-counter purchases. And the only time we ever get people coming in selling gold and silver, I say, hey, listen, I don't think it's a good time to sell, especially when it's down. But most of the time, it's people that said, well, I don't want to sell, but I have to right now. I got to get money for something else. Unfortunately, they had the metal to sell for something else. But all the people that I've seen sell metal, and it hasn't been any large sellers at all. It's mostly been all small sellers, just to raise a couple dollars to pay for some bill or something. But no capitulation, no retail physical capitulation is happening whatsoever. So if you think there is, there's not. And let's take a look at silver market. Gosh, silver we're back into those roller coaster days with silver, or those big moves, 50 cents and $1 moves up and down week to week. I like it, though. I like it rather than just being, nothing happening, flaccid, so to speak. I don't know if it's a good word, flaccid, but yeah, why not? When it's just kind of like sideways. So, but again, I think the gold to silver ratio is out of whack right now. Let's take a look at the world spot prices here. And the low, as far as silver goes, 2150 is the low. Wow. Okay, so she kind of hung in that 2150 range. Looks like she wants to bop back up to that $22 range right now. Currently sitting at 2194. No, I'm sorry, sitting at 2189. So almost 22 bucks. Again, kind of wide range. For anybody who had the opportunity to buy the dip yesterday, it was good. Nice little dip you could have bought at, too. We were selling. Our premiums didn't change. However, I do have to tell you folks, premiums and availability are changing very fast, and it's something, let me not forget to talk about that, because that's going to be pretty important. Platinum in that $950, $1,000 range where it's been sitting for a little while, and palladium, who cares? Let's move out of this screen right here and talk about yesterday's SmackDown. And here, let me see if I can, I'm looking for this one. Let's see, there's a 24-hour chart. There we go. All right. Here we are right now. This is current, and this is the current New York market. So it looks like it kind of bottomed out last night in London or the New York Globex market. It's hard to tell. If it bought, I don't trust either of these marketplaces really, or their discovery price for silver. But I think there's a lot of monkey hammering and a lot of manipulation going on, especially in New York Globex market. If you see activity in the New York Globex market and precious metals, more than likely it's bullshit, spoofing, fat fingering, whatever the hell they want to call it. That's just my opinion. In London, I can't say it doesn't happen in London, but more frequently in the Globex market. So whenever you see huge trades done and you see metals get hammered in Globex markets, it's bullshit. That's absolutely manipulation, in my opinion, because nobody would sell large amounts of gold or silver in the Globex market in the middle of the night. Nobody. It just doesn't happen unless their intent was to drive prices down. And we've seen it happen many times. What I'm curious is right here. Here you go. What market did this happen in yesterday? Here's silver. It was kind of bopping in that 22 plus range. 22.5 right here, kind of lower a little bit here over the week, and then wham, right there. Look at that smackdown. And where did that happen? Did that start in London? I'd say right there. Did that start in the, where was this trade that caused prices to go down like this? Who did this trade, number one, or how many people were involved in that? See, gosh, I don't like the way this site does this. Sorry about that. Using up a lot of memory. Again, got issues with memory with this machine for some reason. But there we go right there. Who caused this smackdown? Was it multiple sellers, one individual seller? And which market did it happen in, too? I need to learn this stuff and find out where these trades are being done, because I'd like to know why this happened on the paper markets, and I'd like to know in what market. Was it London? Was it New York Globex? Was it the New York market as well, which didn't open until it had already started to get smacked down in London or Globex, one or the other, I'm not sure. If this market smackdown was in Globex on silver yesterday, then it's a completely nonsensical bullshit market, in my opinion. If it happened in London, it's still probably nonsense. And New York. Who sells a large position like that and causes that to happen? Again, to me, that just doesn't make any sense right there. But again, I got to stop saying again. I'd like to be able to research and find out who made these trades, or how many traders sold at this level at the same time, and why would you do it that way if you're going to sell a large amount of silver and just screw yourself by watching the prices go down? That's just plain and simple monkey hammering we're seeing on the chart right here, folks. Nothing to do with reality. And again, as far as a physical capitulation, all we're seeing in these markets, we're seeing that the tail is wagging the dog as usual, and the tail is the paper markets. The unallocated paper markets, the naked short positions, all that stuff in silver and gold. So that's where you're seeing the downs in these markets again. But it provides you a great opportunity to buy physical at these bullshit paper dips. Again, that's my opinion. And if you're worried about your neighbor selling his gold or silver, or other stackers are selling their metals, that's why silver was down. Not at all, folks. In fact, stackers were buying more. The retail buyer was out there buying more physical silver. Which reminds me of what's happening right now. I have product on hand here right now, but I won't have it for very long, because my understanding is that the premiums are going to rise up. There's also delays, and this is not just me locally. I have product on hand. I don't know how long it lasts. One guy could wipe me out of it. But my understanding from my sources out there, and I have a lot of really good sources. I've been doing this a long time, and a lot of them are close friends of mine as well in the precious metals. The big wholesalers. I've got some close friends in that business, and they've been telling me on the background. They've been saying, listen, we're going to be experiencing some backlogs right now. A couple weeks out on deliveries on a lot of products. A lot of products we're completely out of right now. So, folks, expect to see higher premiums. Expect to see, as physical, expect to see higher premiums soon. Also expect to see delayed deliveries on a lot of products. I'm not going to do it today, but I'll probably take a look at the three big online companies that I advertise to beat their price, which is APMEX, SD&J, and Bullion. So I'll probably look and see what they have availability out there. Chances are it's going to be all high premium stuff. I suspect that they're going to have delivery issues as well, but we'll look tomorrow. But I just wanted to give you a little heads up. Expect delays and expect higher premiums coming up in physical. Let's talk about news and why gold and silver is going to continue to go up, because of jawboning by the Fed primarily. This is all credit-fueled bubble that the Fed, the greatest bubble of all time. When digital art on a NFT, a token, or whatever the hell that is, sells for a couple $1 million, and video games can sell for $500,000, and unopened Mario Brothers or whatever it is can sell for $500,000 million. I'm not dissing that market, but it's just crazy. It's just crazy right now, and this is the greatest bubble of all time. And when this blows, man, when this bubble goes, well, you're going to be glad you own gold and silver. However, don't forget, I've said it over and over, when this giant bubble blows, the paper derivative markets in gold and silver are going to get so hammered badly that you're going to wonder what happened to the price of gold and silver. However, you won't be able to find any at that level. it'll be impossible. Delivery times will be way out. The price discovery for precious metals, like it was in 2008, will be completely screwed up for weeks and weeks and maybe even months. So be prepared for that. But do not, when the bubble goes, and how, I don't know if this is going to be an overnight thing, is it going to be a week thing? Maybe the bubble's going now. Maybe that's why prices are out of whack with precious metals. Maybe that's why the silver and metals are going to be getting harder to get again. It just doesn't make sense. It's a weird environment, and it's all created by the Fed. This is why I know you get bored, some of you saying, hey, why is he talking about politics and economics? That's boring stuff. I didn't come here. I came here to look at silver bars and talk about silver and gold bars. Well, you know why I talk about this is because it has a big impact on us. So does the news. Politics has a big impact on what the price of gold and silver is going to do. And I'll get into that in a minute here as well. I think we read this article. I'm not sure. It's well done by Adam Hamilton. I'm just going to go into, I recommend you go to Seeking Alpha. I think you can read this for free. Great website. They don't pay me to say that. And I am a subscriber, actually. You can subscribe too. It's pretty cheap, and I think if you deal in equities, it might be a worthwhile thing to look at. Fed QE tapering gold. I'm going to just read the summary here because I want you guys to read these things, and it's well written right here. Let's just get the summary points. The Fed tapering QE4 isn't bearish for gold. Slowing extreme money printing is a far cry from actual Fed tightening. Thank you, Adam. You exactly. People thinking like tapering. Oh my God, tapering. It's nothing to do with slowing the money supply at all. Nothing to do with it. Very little, if anything. The FOMC isn't even considering unwinding QE's vast monetary excesses. So they're not going to unwind all the stuff they bought secretly that we don't even know about. The Fed probably, the central banks and the Fed probably own half the world right now. They probably own your mortgage as well and your firstborn. But actual Fed tightening requires a QT or a new rate hike cycle. Even if the Fed carries through on QE tapering, money supply growth will remain fast into the middle of next year. So yeah, again, what Adam is talking about, it's just freaking jawboning. And the jawboning they're doing is on insignificant manner. You know what I mean? They couldn't raise interest rates meaningfully enough to make a difference without breaking the whole system. Whether the Fed actually finishes or not, the dollar's deep sub-zero real yields and recent doubling of its supply remain very bearish for this currency fundamentally, and that's bullish for gold. And that's why we talk about this stuff, folks, because it's bullish for gold when the Fed does these kind of things. And I know talking about Feds and central banks and all this stuff is boring, and again, sometimes you'd rather talk about the product or look at the product, but this stuff is really important if you want to keep up on what you're doing here and why you're doing it, and what's causing the movements. I like Charles Hugh Smith. Again, this goes into economics. He does kind of merge politics with economics, and he's really not a gold guy per se, but as I said, I think this stuff is very important for us gold and silver people because, he's talking about the market crash nobody thinks is possible is coming, and this is what I've been saying for a long time. I think it's possible. I mean, who doesn't think a market crash in the greatest bubble of all time is not going to happen? I think everyone believes it's going to happen. I think a lot of people are just in denial about it and rather not talk about it publicly, especially those in those particular markets. If your entire 401k is based on Wall Street and equities and everything like that, you don't want to hear about a market. You just don't want to hear it. It's like see no evil, speak no evil, hear no evil. If you are a purveyor in those products and you're a broker or a financial institution, you don't want to talk about that either. But they know it. We all know it. It's going to happen. It's not a matter of if, it's a matter of when. Charles talks about this here. The ideal setup for a crash is a consensus that a crash is impossible. In other words, just like the present. Sure, there are carefully measured murmurings about a correction, but nobody with anything to lose in the way of public credibility is falling for an honest-to-goodness crash, a real crash, not a wimpy, limp-wristed dip that will immediately be bought. What I'm calling for, and what Charles is saying here, and this is a smart guy, and I believe that he's exactly right, what I'm calling for is a rip your face off, weeping bitter tears over the grave of the speculative wealth that you thought was a forever crash. All those buying the dip because the Fed will never let the market go down will be crushed like scurrying cockroaches, and all those trying to rotate into the next hot sector or asset class will also be crushed like scurrying cockroaches, because when the everything bubble pops, well, everything pops. There is no shelter in a risk-off cascade. And he's absolutely correct about that too, folks. And as I said, I think you're safe with physical metals. When we see this everything bubble, the greatest bubble of all time pop, you are good with precious metals. And God, that's my chair squeaking there. You're good with precious metals. You're going to be fine, but you're going to see the price that you're going to see on the TV and on the screen is going to frighten the hell out of you, because the greatest bubble of all time is going to take down the price discovery for precious metals, even though the price discovery for precious metals is bullshit, in my opinion, based on paper, not physical. But it'll take down the price, so everything is going to get hammered. But you're in a good position. Do not sell your physical metals at all, folks. The crash is coming as a result of multiple mutual reinforcing dynamics. The first being that no serious person believes a crash is possible, much less imminent, in no particular order. Here are a raft of other casually consequential triggers of a cascading market crash. And Charles is going to go into some things. I'll read it since my next couple days I'm going to be fishing and it'll be short shows. I'll make this one a little bit longer. As I noted in my call for the top, and he writes a lot, again, I suggest you subscribe to Charles Hugh Smith of twominds.com. I don't get paid for saying this. I just like people that write good stuff and write truthful stuff, and I really like what he has to say, and you can read it for free just like I do. As I noted in my call for the top, there's no history to support the widespread confidence that the extremes of overvaluation, leverage, euphoria, and speculation last forever, or even much longer than the lifespan of a cockroach. He keeps bringing up cockroaches. Well, we're past the benchmark into unprecedented insanity. So what happens next? Squish. Just for the record, the Dow topped off August 13th, the S&P topped off on September 2nd, and the NASDAQ topped off the day after September 7th. Correct. So, have we seen the tops in these markets? I believe we probably have. Maybe this market crash is not going to be like it was in 2008. It'll be the death of 1,000 cuts. I've used that term quite a bit lately. That's how you're going to see the equity crash, perhaps. But I don't know. When people just get out in mass and panic, and I think that's what they're trying to do, is prevent panic out there. Number two, the credibility of the Federal Reserve is in the dumpster, which has just caught fire. As I explained in the Fed is corrupt on multiple levels throughout, thoroughly, completely corrupt, and so are the minions, proxies, apactorichicks. Okay, I don't know. A good word. I always learn new words from him. Toadies, apologists, and lackeys. This is finally leaking through the Fed corruption containment vessel, as even the lackeys and the billionaire-owned corporate media are now fearful of losing whatever tattered shreds of credibility they still possess by refusing to acknowledge Fed corruption, overreach, and hubris. And so at long last, the Fed no longer walks on water. The Fed's fraudulent travesty of a mockery of a sham scam has finally breached the 3-foot containment walls, and the putrid stench of Fed corruption can no longer be bottled up. Wow, that's a mouthful. I can tell Charles doesn't care for the Fed too much, but really, he's right. These are the people that they're going to create massive pain out there. Fiat currencies. We handed our entire gold system and our entire banking system, our currencies. We handed them over to a bunch of bankers who had never had our best interest in mind, only had the interest of sucking us dry as much as they can, and they're close to that point now. So I can't argue with that. These people are not good people, folks. When you rob the wealth of the working class and small business people out there and doing it through the money that they're supposed to trust, you're an evil. You're evil. Just my opinion. Like any good kleptocratic Politburo, the Fed cashiered the two most indefensible scapegoats to divert attention from equally corrupt incumbents presiding over the collapse of the Fed credibility. Don't be surprised if the scapegoats get airbrushed off the two guys that just got resigned this week from the Fed. They're going to get airbrushed out of photos at the Federal Reserve meeting place, I guess, or they're going to be made non-existent. Number three, as I detailed, the fuel of the inflation rocket has just ignited, and the clueless, corrupt Fed is watching the boost phase in abject, humiliating confusion as the Fed is now completely powerless, having blown the opportunity to get ahead of the curve by reducing their making billionaires richer stimulus a year ago. So really, all the Fed did was bank in 2008 was bail out their buddies, And again, they bailed out their buddies this time, and they threw a couple checks to the working class. Oh, here you go. Here's a couple $1,000s a month. That's what they did, but they made the rich richer. These people are evil, folks. I'm telling you, nothing good about it. Ron Paul has always been right about the Fed. Here, let's move along from here. 4, the Fed has lost control of the yields. We all know the liars reveal their dishonesty via micro signals, and with this in mind, slow down the video of Fed Politburo speakers, starting with Chairperson Powell. Wealth inequality soaring. It's not our doing. Wow. Oops, the cat's out of the bag. The Fed's lost control of yields. China is not saving the world this time, and we don't really need to read much of that. China has other fish to fry and isn't bailing out global markets as it did in previous bubbles. The rising U.S. dollar is kryptonite to speculative markets, emerging markets, debt, and risk on euphoria. Sorry, but you know what happens next. So a rising dollar is not good for any of the markets as well. They know this too. So the Fed is in a balancing act. Like I said yesterday, it's a sinking ship that we're on with the Fed. We all are, because we're all everything's based on the dollar. We're all on the sinking ship with the Fed. They're telling you to remain calm, everything's cool, even though we're up to our necks in seawater. And for some reason, a lot of people are in denial that we're up to our necks in seawater, especially the media, government, and these giant corporate financial institutions. The buy, the dip crowd has been so well trained, they'll provide the necessary buying to keep the cascade from gathering too much momentum. Stair step down that sucks in by the dip is ideal for those profiting from the decline. First up, a rally to close the quarter positively to make it appear that every money manager beat the index fund, and so on. But the net result is still squish. The banquet of consequences is being served, and the risk-off crashes like revenge are best served cold. Oh boy, it was a stinging article by Charles this time, but this has everything to do with why you want to own physical metals, gold and silver. You don't want to be in the paper markets when this whole thing takes a giant crap. And who else knows what could happen? The internet could go down, power could go down, all kinds of things could go down that could cause wars. I mean, there's no better time that I've ever lived through in my life to own gold or silver. And again, not to have someone else own it for you, no matter how well-intentioned they are. Do not incur third-party risk. I don't care who it is. You want to own the stuff yourself. You don't want to own a piece of paper that says you own it. You don't want to own a ETF, even by the best one out there, supposedly. Even if it's in your name, that doesn't mean shit. The only thing that really means anything is when you physically have it in your possession. At that point, you just have to make sure you keep it secure. GATA.org, this is pretty cool. Those coins that they dug out of the French Mansion walls that I showed you, like, what was that, 6 months ago, almost a year ago or something like that. They just sold them off for $1.2 million. Pretty cool story. You can read that on GATA.org for free. Recommend you do. We've already kind of looked at these articles from yesterday. They don't update that often, but when they do, they've always got some good stuff on there. And these are the guys that know the gold market better than anyone out there, and the silver market, GATA.org, as far as websites go. Ted Butler, if I had to name a person's name, he'd be the number one. I'm a big reader of AIER. I think it's very smart, very heady stuff. I'd like to read some of these articles sometimes, but some of them are very lengthy and they're very heady as well. And I don't want to bore some of you with, again, economics, politics can be quite boring at times. And what I'm trying not to do is I'm trying to be somewhat entertaining and educational here. But there's some good articles on here. The current administration had made some comment that their new plan would cost zero. And that, I thought it was a typo at first, that this man said that the new spending stimulus plan or whatever it is would cost zero. Really? And come to find out it wasn't a typo. They really said that. And wow. Again, this goes back to what we were talking about the other days, predators, parasites, and producers. Predators and parasites, let's see, like predators and parasites, from these parasites and parasites to these parasites and parasites, predators and parasites out there. They've been sucking off the producers, the working class and the small business people for years and years and years. And again, good article, not your typical corporate mainstream article, which wouldn't even discuss this stuff right here for the most part. But again, just wanted to share with you some of my reading. I'm not going to talk about anything here. I think you'd be a smarter bear by adding this to your reading list as well. ZH, same thing. There's another parasite predator. Right there, come to find out, this guy may be considered somewhat parasitic as well, or from what this says that he may have done. No less, I like ZH because they usually have some gold and silver articles out here, and well-written ones, but not too much in the last couple weeks, oddly enough, other than from the people that we typically see them from. Let's take a look here and see what's going on. Good. That's nice to see. And not too much, overall, you see me kind of, even though when there's not any news on ZH to talk about like specific to gold and silver, I still like to go over it because I don't see any good news out here, except maybe initial jobless claims unexpectedly jumped to worst in 7 weeks. I mean, when I just kind of scroll through this, you can see, folks, we are not even close to hitting bottom right now as far as a society, economically or politically. We are getting there. We're in a free fall to hitting bottom here. But I think what'll hit bottom, when people's pocketbooks, when this market takes a giant crap, this is when the political and economic stuff will hit the frickin' fire and the storm. This is when you'll see the country blow up. People are willing to put up with a lot of stuff, but don't screw with their retirement. Don't screw with their money. Otherwise, gosh, and you know what? You couldn't pick a better administration to be in charge at this time, because when this shit hits the fan, who's ever in charge is going to take all the heat for it, and they'll probably never be able to run for another office their entire lives after this. Again, just my opinion, of course. Let's move out to yesterday. I'd like to thank all the Wall Street silver people out there that a couple of them have subscribed to my videos and watch the videos out there. I really appreciate that, and I love the enthusiasm of Wall Street Silver as well. If any of the people that watch my videos here are not subscribers to Wall Street Silver, hey, I advise you do. It's kind of fun. These guys are a lot of fun. They post some really cool memes, and there's a lot of small working class people out here, and a lot of smaller buyers, and a lot of small business people, producers, the people that I call the producers. This is mostly filled with producers in the world out here trying to increase their net wealth, and I like the site. Sometime, like I said, I really wish there was a Q&A section in here where I know other people answer the questions, but where I could go in and give my opinion as a professional wholesaler and retailer in precious metals. And you know me, I'll give my straight up real answer, so at least my opinion. And but anyways, if you're not subscribed to Wall Street Silver, I highly recommend you do. It's some cool stuff out there. And if you can, whenever you go out, try to post educated stuff. Try to educate people, because there's people out there that aren't members of this group, I'm sure, that may look, and they're going to learn too. So keep the education factor up there. Well, let's take a look at yesterday's video, and misery index versus gold index. See what I'm talking about? If you don't have a great clickbait title, your views aren't that good. So people get bored with economics and politics. But I said it yesterday. I'm so sick of the YouTube videos that use, especially in gold and silver markets, where it's just clickbaity titles. Gold, $5,000, or silver back down to $1, or this, I don't know, man. And the titles often are somewhat, when the markets are down, the titles are somewhat negative for the industry in general, but they create clicks, and I don't like that either. So I like to tell it like it is. I like to make my titles what I'm talking about primarily. Again, that doesn't always suit you as far as getting clicks. Sorry about that. Just kind of sharing my experience on this particular format and how I'm kind of viewing it right now. I'd like to thank everybody here for watching. And Thomas Crompton down here says, not waiting for Shiite to happen. The idiots are making it happen. It's a silver crash. Yeah, but I wouldn't worry about it. It was $28 not 2 months ago. It's getting a monkey hammered based on a high paper U.S. dollar index. I'm not quite sure that, I think it just gets monkey hammered using the dollar as an excuse. I was talking to a friend of mine that I met recently, and he's a chartist, actually. I want to learn some stuff from him and maybe even do an interview with him one day. I might start doing interviews sometime. But we were talking about this, and I was saying, listen, what if people trade based on charts? There's algorithms that trade on charts. what if the people manipulating the markets know this and do specific things to cause the charts to be skewed in their favor, whether they're buying or selling? How accurate are charts then, really? And I think that was an interesting question for him, because at this point, if the data going into your charts is manipulated and incorrect and manipulated by people, then your chart's incorrect, obviously, isn't it? Or you're not getting the real data. I kind of think that's what happens too, as well, when they monkey hammer silver and gold. They'll wait for Fed news to come out and for Powell to speak, or they'll wait for job claims to come out, and that's when it happens. And again, it usually always happens in thinly traded markets that nobody cares about. So I believe that's why we're seeing the monkey, and it will only last so long. At some point, the price discovery is just going to go wacky on this stuff, and it already is kind of. Think about the premiums. It's supply and demand factor. Premiums right now are going up. They will be going up shortly here. I talked about that earlier. We'll talk more about this week. And supplies is getting thinner and thinner and harder to find. So, and which doesn't make sense considering that JP is holding on to what I don't know. Certain people say 600 million ounces. I've heard people say almost close to 1 billion ounces of silver that they're holding on to in vaults, 30 million ounces of gold. So what's their intent, too? You could do a whole show on that. Well, thanks for watching, Thomas. I appreciate it. Thank you, Michael, Master Sensei. Disappointed? Don't be disappointed, sir. The garbage can is not necessary. Again, if you were in this market to get rich quick, you're in the wrong market, sir. But just relax, buy the dips when you can, and just hold out. Unless you plan on dying soon. I hope no one is, by the way. But unless you plan on not being on this earth soon, you should probably hang on to your gold and silver and just ride this through. It's not a big deal. Again, I don't think it's a big deal. Thanks for watching, Master Sensei. Last old cowboy by the silver flash. Yes, sir. Someone was distracted by filing nail sounds at 11:23. I saw this morning and I went and looked. I couldn't really hear anything, but hold on. Is it my chair? Ready? Can you hear the chair moving around? Maybe it's the squeaky chair. Sorry about that. Again, this is not a professional production, by the way. We just wing this. Thanks for watching Double Aught. Tree Climber says 2 spams on. Yeah, I'm getting rid of the spams. Thanks. Appreciate you bringing that up. What browser are you using? I was using Safari, but now I'm using, what the heck is it? The Big O, whatever that one is, the one that uses the Big O. But I'm noticing that my memory's still getting eaten up. It uses half my memory. I got 32 gig and half of it's gone. Something's got to be running in the background that's causing that, because it's ridiculous. Thanks for watching, G. Thank you, Omar. And G, nice to see you post. Celtic, you as well. Guy says, what really sucks about workforce is they want to introduce a UBI income. This is how they're going to get it. I've had fear for this some time. Yeah, Guy, that's kind of what I'm looking at. They want to go to a cashless society, and they want serfs. They want slaves. They don't want voters and free-thinking people. That's what government wants. They want slaves. So does the corporate, crony corporate folks out there. What do I call them? I call them crony corporations. So anyways, Pocahontas is trying to get Powell out. Does it really matter? Pocahontas is just trying to put in her favorite flavor, Powell, in there. Someone that's willing to bend over and just print more money for their particular cause. But meanwhile, the Fed knows who they work for. They work to keep the governments just barely happy. They don't work for the people, but they do work for the war machine and covert agencies, I believe. Tree Climber says, what's the gold to silver ratio now? It is. It's almost in its 80. It was in the high 79s. It was 80 the other day. I suspect that either gold's going to come down a little bit, which I don't think, or silver was way oversold, which I do believe is the situation here. Enjoy says the only hope for silver is the dollar resistance around 94.7 and an overbought RSI. I'm not quite sure. Yeah, Chinese holidays next week. So you did make a good point here. So if the Chinese holidays next week, and with any kind of news coming in, you could see some more monkey hammering going along as well. And like I said, it'll happen in overnight markets or in thinly traded markets, and it'll happen in big volume. That doesn't make any sense. Thanks for watching. Merrick Pride, good to see you. Gritty says AG is going to go down with some more, but doesn't matter to me. I'm relatively new to this, but I'll pick them at. Yeah, absolutely. You look at it from a wealth preservation factor. One day you're going to look at $20 silver and $25 silver and $30 silver and say, man, that was cheap. It's just the way it is. Thanks, Michael, for watching. The world of Dr. Seuss is, yeah. Yeah, Dr. Seuss has a lot of lessons that even adults can learn. If you read The Places We'll Go, that's an adult book, man. That's a psychology book for adults if you read The Places We Go by Dr. Seuss. It's a pretty cool book. It's got some good life lessons in there. I know, I'm a middle-aged man talking about Dr. Seuss and life lessons, but it's true, man. Thanks for watching, Michael. Joey says, Soul Folgers, I got to take a sip when you said that. Thank you, Chris. Appreciate that. And you too, Silver Loving Lou. Well, here, let me do a quick sip. Listen, if you're new to my videos, please hit that subscribe button. I really appreciate it. And also, if you haven't already, the like button is nice to hit too. It lets me know who's watching and it boosts my ego a little bit. Well, hey, thanks for watching, folks. This is Brian Kuzmar with Commercial Rare Coins. Call me anytime at 954-493-8811 between the hours of 10 and 4, Mondays through Fridays. Happy to help you out. Have a great day and talk to you soon. Bye.